Alrighty, guys, welcome back. Happy Thursday. Just making sure all the technicals are good and making sure I'm on track with everything going on before we get started real quick. Hope everything is going well for you guys. Happy Thursday. I know it's not been a great past couple days, but we're going to be diving into some good readings. Got some good readings, some videos, and some other things that we are definitely going to be talking about today that could definitely be steering us in a better direction. It's definitely a middle ground right now today. I was definitely thinking today, I was like, man, like I was reading through the news and just really catching up, and I was like, wow, like it really is a split divide, like 50-50 of how people are really feeling right now. Like you got people really running, crying, and you got people who are sticking strong, 10 toes down, not phased at all. And I mean, it definitely is. It's a hard split. It's really hard to, follow your metrics of whether, you feel, because it could really go either way, guys, seriously. But I was just, talking, just kind of just getting it out there, kind of just giving the feel for the day. But all right, let's make sure I got a lot of different articles up, making sure. Alrighty, we're gonna bounce back and forth between some of these metrics, but alrighty, guys, no worries. Cool. Alrighty, guys, we're definitely gonna get started now. Welcome for all who are new. I'm Trent Manager. Welcome back to MTV TA. All my returning patrons, thank you guys for, of course, returning. Glad to have you guys here today, and all my new people, of course, blessed to have you here today. But today, guys, for all you who may not know, we've had definitely a bit of turbulence, lots of bearish turbulence in the market, and, lots of downside, from bad news to, people not trusting the process, and, just a lot of compiling things that have been causing, what we're seeing. And for those who didn't see my video yesterday, kind of just had a short little 10-minute video that, was kind of just a more peer-to-peer, touch-to-touch, just referring to, we've all been there. We're all in this together. This is not a single you show. We are all really 10 toes with this together, and this is something that if you survived yesterday and you are continuing to add on to your positions, or also be educated and become more educated in your fear. So regardless of how new you are, and you have made it through, and you haven't quit the game and said this is stupid, or this isn't real, and all so on. Big kudos to you, because you have endured probably a lot more emotional turbulence than most people ever have, and probably ever will. So really props to you if you are still here, trying to learn and continuing to educate yourself. But first off, guys, definitely a couple readings. We're gonna be bouncing around again today, just because there's a lot of stuff I read, and there's a lot of good things that I read, and there's a lot of middle ground things that I read, and also bearish trends that I read. So we're kind of gonna be going back and forth. Didn't really have a set schedule today. Kind of just hopped on here and just wanted to really speak more from the heart today, just because I know it's still that wound is still fresh for a lot of us. So definitely, realistically, what I wanted to talk about first is let's get the big players out of the way. Let's make sure we can get the banks, institutions. Cover JPMorgan a little bit, some of the whale activity as well. I'm going to talk about some of these big guys as well, just to kind of see what their thoughts are. Because one of the big things I really do is, I get questions a lot. It's just like, where do you get your information from? Or, who do you follow? Like, who do you get your advice from? And realistically, guys, I just follow the money. People can talk all they want, but, words are pretty hollow. Actions are really where things are definitely made. But, just for some bullish catalysis news, we saw yesterday, and I got a video on Kathy Wood as well that we're going to watch today, is Ark Investment has been picking up, they picked up about 20 million in shares of Grayscale Ethereum Trust. So this wasn't anything new. We've seen this throughout the bull market of, people really, the higher individuals shaking us out and trying to, really hop in this asset class and, get back at a lower price point. We've talked about, when people miss the boat, like you and I, and, we miss that train, such as the cryptocurrency train, or, anything along those realms, the boat doesn't come back. But it seems when the institutions and the big guys miss the boat and, they're not comfortable stepping in the water, they can usually, get another ticket and
have the boat circle back and pick them back up. So, I mean, realistically, this is pretty proven, guys, and we've seen this not only just with cryptocurrency, but also with the stock market, that this is something that is not new. We've seen a lot of these big guys come out and, openly regret the decision of not hopping into cryptocurrency. And realistically, no one wanted to be that schmuck anyway to buy Bitcoin at $55,000 or $60,000 or even 50K, with, I'm trying to think of good institutional money margin, what people are buying. Like, no institution wanted to buy $150 million worth of Bitcoin at $55,000. That's just not realistic, in terms of, capitalizing on the most that you can, and what these institutions can do is that, they can circle the boat back. So, not trying to get all conspiracy and, this is all because of them, but realistically, guys, this is the real first time that we've had the regular guy, the average Joe, me, you, your grandma, your cousin, really understand the asset class and beat the big guys to it. So, and we're going to also cover a little bit more today in a little bit deeper of, Ethereum and DeFi, and we're going to go over that and I'm going to broaden my points as to, how this is really scaring a lot of, these higher guys, a lot of these guys in banks and so on. So when we get to that, we will definitely give that a cover. But definitely wanted to scroll through this real quick. We got a video on this that we're going to watch. But here's some of the quotes from the reading and the overall article. Remember when you told the institutions you would never buy ETH? They keep underestimating this asset. ETH is money. That's been a big one. You guys know we talk about Ethereum a ton on this. Whoops, didn't mean that. You guys know we talk a ton of Ethereum on this channel just because we enjoy the use case. Not only just because I'm a developer, but just because I enjoy the use case and I've overall enjoyed the asset class. And also, there were many times when crypto would have been strong enough to survive without BTC as the dominant narrative, and I no longer believe that this is the case. Regime, that means change is coming, and that also is very true. Like we've seen rare times where Ethereum has outperformed Bitcoin. And there's been massive draw. Actually we've seen plenty of times where Ethereum has carried the market. Where Ethereum is blowing up and BTCs need a cool off. And I think yesterday I'll have to relook on that Twitter, but we saw a trending hashtag yesterday of Ethereum. It was spelled wrong. It was spelled like ETHIREM or something. Most people know how to spell that well. I'm not. I'm a little bit dyslexic, so don't come at me for spelling. But realistically, guys, a lot of these bigger guys are seeing this. This, and we're going to be really diving behind the scenes and kind of seeing. It's such a mixed pool of media right now that people are seeing only the basic headlines, CNBC, and a lot of these more mainstream ship out articles that are meant for people who don't have a lot of information in this market for them to be shaken out. They're literally taking you by the shirt, shaking you really hard, and getting your change off the floor. In terms of your Bitcoin and your other valuable cryptocurrencies such as Ether and so on. So that is definitely something we definitely got to consider. Is that these bigger guys want to keep control. They don't want the littler guys to beat them to asset classes and eventually outweigh them in terms of use cases and technology and integration and all moving forward. So I'm going to wrap up this article just because I wanted to really kind of touch up on that for the big dudes. And also for Wells Fargo, we saw this not too long ago either. This was yesterday. Wells Fargo on board for activating cryptocurrency strategies for their rich clients. So what they mean by their rich clients is usually per bank, depending where you go, depending on your income and, how your net worth, rolls around, you could be considered a wealthy client. So what that really means is that, you can get certain benefits, such as, better loan rates or, things for business, overall accounts. You guys have heard about those VIP black cards. Those are pretty common, with people who are higher net worth, kind of just show status, but, has a little bit more back end, thumbs up for it. But Goldman Sachs has been, well into the game. JPMorgan, we've already known, has been here, working with their Ethereum smart contracts and really working with the Ether network to, make finance a little bit easier for them. Most of the time it is more cost effective, as we've talked about with the Bitcoin green narrative of the environment and just overall, the renewable energy source, it is a lot cheaper and, more globally effective in a green way, using Ethereum versus Bitcoin. But, that's, it's not too far of a gap, but just overall, just wanted to make that a little bit clear. But a lot of, regardless, with these bigger guys, Wells Fargo is still making it happen, just because things are not looking so good short term to medium term, we still got to work. I'm still working on the Ethereum network, still working with Chainlink oracles, like the roadmap is still too strong, I believe. And I talked about this last week is that, I was a bit of a neutral yesterday, it was definitely scary. Emotions take a toll, but in the terms of long term, guys, I'm not, no, like in terms of long, like, a year plus, oh my gosh, I'm full green all the way. It's just the short term, consolidations in times like these where it's hard to, look 6 months out, or a year out. It was hard. It was hard yesterday seeing that, and people who told you they weren't scared yesterday, they were probably lying, because I'll tell you right now, I was pretty scared. I was pretty scared. I come on here and I'm very honest with you guys, and I'll let you know, how I'm feeling, and I'm definitely here for all your education and thumbs up purposes. So that's really all I really wanted to cover for Wells Fargo, and kind of just remember that there are things like this still happening behind the scenes very often, every single day. So, and also going over to JPMorgan, we've known this for quite a while, and just to back up my first article and the first point that we talked about is that JPMorgan has been known for manipulation, and a lot of these big guys have been known for this type of stuff. We saw with GME, we saw at AMC, we saw Robin, we saw literally not too long ago, 3 months ago, what the manipulation process is and how these big guys can do this, and how big of a problem that is. And because people come over here to crypto land, and they're like, oh man, so much risk, and man, I don't know if I could trust this. I'm just gonna keep my money and myself pick stocks, or I'm gonna go put them in the the VU or the S&P and just kind of just do my thing. And absolutely, that's completely fine. Everyone's got a different risk tolerance, and not everyone wants to be, no one wants to be first, and no one wants to be last. We see that quite often, and the problem, with that is things like this, and it's hard to stop this because you have such a big overall grip, of the world. JPMorgan, a lot of these higher up executives, the reason these guys don't get in trouble and they're not punished to full extent like you and I would be, if we were to have a little bit of a a different stake in it, such as us being a smaller equity pool. Let's say you guys and I ran a small equity firm and we pulled something like this. There'd probably be a good chance we'd probably be in jail, just because number one, we don't have the credibility with the world. Number two, we haven't made a big enough impact on the world to have that backing. And I mean, number three, it's got to do a lot with equity, guys. So pulling back to the 1.26 billion in manipulation, you can see how this was just with the metals market. So God forbid JPMorgan helping with other issues in the market, such as even cryptocurrency manipulation, or wire transfer issues to help their private equity funds, or whatever these guys are doing. We've always known that these guys haven't been completely truthful, and I'm not stabbing at JPMorgan particularly. I'm just saying I'm using them as a prime example because they seem to always be in the most dirt. Like really, they always seem to be in the most problems and always get caught red-handed. So definitely they got to walk a little bit more careful, I'd say. And if they're gonna be manipulating and do bad stuff, you got to make it not so apparent for us, because now it's wide open, and that just kind of drives the narrative as to why people head to crypto in the first place, and they head to the blockchain ledger because they understand that we don't need middlemen like this to tell us what to do with our funds. So just kind of really wanted to get that out on the table. Awesome. And finally going to wrap it up on the institutional side. Let me just double check. I think we're just kind of need to go ahead real quick and make sure we were staying on track. Awesome. So kind of just wrapping up too with the institutional talk. I believe that was the last one that we had before, regardless of our videos we're going to watch. Bitcoin whales feast as BTC price and wider market meltdown emerges. So we knew that they were buying the dip. We had a good feeling, and we knew there was a reason somewhat why prices were dropping pretty hard. Granted, we knew we had a ton of different catalysts and a ton of different price points, or not price points, a lot of different spears thrown in different directions as to why price was falling. It wasn't just one thing, guys. There was like 8 different things that were going on, and when you get 8 different knives coming at you in every direction, you're gonna get hit at least by 2 or 3 of them, if not more. So this was kind of unavoidable in the sense of that. But behind the scenes and all the chaos, when you look through the smoke and mirrors, you can see that institutions have not given this up. And definitely, for me to be clear, not saying that this is going to be such a a bottom out and then we're gonna jump back up to the top. No, I do believe that it might take a bit. We will stagnate a bit, on our way back up in the way we, move forward. But, with that being said, we've talked about time and time again on this on this channel, at least, of lengthening cycle theory, diminishing returns on every single big run that we've had. So that doesn't mean that things won't go crazy far or crazy long in terms of price action. It just may take us longer to get there. When you got a bigger market cap, it's harder to move assets at a faster rate. And in terms of market cap, guys, like we will get to that here. Actually, let's just do that now so we can kind of just make that comparison. Let's see real big the market cap comparison of just Bitcoin between let's see where I put that asset class. Large. Oh, here we go. Perfect. Here, let's do tech real quick because this just might be a little bit of easier one. And then here, yeah, we'll definitely go. We talk about that chart quite a lot. So if we were to really take Bitcoin's market cap, and we are about 781 billion, and we were to plop that into the largest tech companies by market cap in the entire world, so we are just under. We are actually, let's see, 747. Yeah, we're beating out Tencent. And we are actually about to pass Facebook. So, I mean, we were above. I mean, before the sell-off, we were above. We were no, we were not number 4. We were number 5 in terms of, overall market cap. So, if they were to add us on this chart, guys, like, we're number 5. And, like, when you really grasp that into, like, magnitude, like, we are beating out all of these guys. Like, and that's not even just, like, the overall crypto market, like in the trillions. We're talking about just Bitcoin, like just the market cap of that asset, and Ethereum not too far behind on this one as well. Ethereum's number 30, and Ethereum's 4 years younger than Bitcoin. So I mean, I'm throwing out a lot of good data and metrics right now, just some thumbs up, and I'm definitely really just trying to get a lot of settlement down, try to really lay kind of smooth the ground for you guys. I mean, lots of blood right now, but still, man, like just see through the smoke, and like things don't just stop running because prices are dropping. So realistically, guys, like we're still in really good shape. I mean, I'm just being real. We're still in good shape long term. Just the turbulent short term might be a little bit choppy, but yeah, don't try to think too short term. Just try to really think like even just 3 months, where we could be. And things move quick, guys. Things definitely move quick. So definitely want to get that on there and kind of just express my opinion on that side. So going back to the whale article, and they go over some Glassnode metrics, like we always do, time and time again. Whale map is really good. For anyone who doesn't really follow crypto Twitter, I would really recommend that you guys go follow some of the guys that we're going to talk about here in a minute on Twitter, referring to crypto Twitter, because some of those dudes are really, really good. Not all of them are good. Some of them are kind of mean, but overall, majority of them they're very notable, incredible people. And, last quote from the bottom, overall, this is a great buying opportunity with a clear invalidation, which makes it a great risk to reward trade. I can agree with that. Absolutely. If I had to bet my chips, I'm going to bet my chips that, next 3 months, we're going to be talking about this right now. And we're going to be like, hey, like, good job, guys. Like, if you made this risk reward, investment, and you took the risk to just ride it through the bloody streets, you were, I think Warren Buffett always says, the markets will always transfer the active funds or active something into the hands of the patient. So that's always been a big thing. Patience is a huge thing with anything. That's just life. That's really just life. A patient supply is a very underrated skill set. So regardless, guys, we're gonna wrap that article up as well. So definitely wanted to get in there and just really just lay some ground. Just really trying to lay some ground today. Seriously. And then also we're gonna. We'll cover this shortly. I know this was a big problem yesterday, that crypto exchanges reported outages amid extreme volatility, which was very true. We saw this in March, and this was a really big issue. And this is something that should be eye-opening and should be really, really exciting to see for, moving forward with decentralized finance. And we talk about DeFi a ton, but, there's a reason that we talk about this. And the reason is for, here, we're going to go to our AW app, wherever that is. Here, let's go to, here we go. And the reason that we do cover DeFi so often, sorry guys, I had so many tabs open, is literally because of a reason like this. So here, let me get this wide open. So, sorry for my handwriting as well. So we're going to be talking, I'm just going to give it just quick little lesson. So the reason that DEXs stand for decentralized exchanges, and when you put them in the narratives of Robinhood, Coinbase, Voyager, those are centralized exchanges. Like, yes, those sell cryptocurrency, but those are what we call centralized exchanges. Those need KYC, and KYC is simple as your name, oh my goodness, sorry guys, name, address, I was gonna say Addy, social sometimes, and like email and phone number, like just basic information of who you are and making sure that you're really you. And where this is so important in the terms of like I had yesterday tons of people come in and say that Coinbase was down for like the first 2 hours of the prime examples, and then like Voyager was down. Who else was down? I mean, Robinhood was doing okay, but still Robinhood doesn't have the best rep, of course, you guys know. And buying crypto on Robinhood isn't I don't recommend it very much as well either. But realistically, guys, we literally saw the separation between someone not being able to move and do what they please with their own money once again. And that's not because of the fault of, I mean, it is from the fault of the exchanges, but in terms of volatility, in the overall exchanges, what they have is that, like, they can't handle yet that amount of influx, and that's an issue because, if you can't handle this now and merge with the panic, what makes you think you're going to handle another, 500 million people? So that's where DeFi comes in. And it takes a major step in the role. And what that does is how, we talked about Uniswap, we've talked about Compound, we've talked about, eliminating that middleman and truly being your own bank because, you have no restrictions when it comes to, being your own DEX. But the con, really where you come to that, especially if you have a very large capital and lots of money, cons is that, it's really your own risk. There's no FDIC insurance to come get you if you mess up, send to a wrong address or anything along those lines. You truly are your own bank, and that really does fall on you. So every action you make is appropriated to you, and you can't go out and blame anyone else. How we could go blame, Robinhood or Voyager and be like, or Coinbase. But, these guys just take a lot of issues away from having to, worry about a lot of the cons that you may have of being your own bank. So the pluses of that, decentralized finance is, is one of the, you'll never have anyone tell you what you can and can't do with your money. And, therefore you are truly your own bank. And that is a big appeal to a lot of people, and this just backs up everything that we've pretty much talked about versus manipulation, people shutting down exchanges, not giving you your money. You guys could probably tell me the amount of times that people have told you no, you can't do something with your bank account or your bank account gets shut down. I'm the king of that. Like, I've had like 4 bank accounts shut down for buying Bitcoin. Like, back in 2019, I had my first ever bank account was shut down because of that, and my mom was pissed. Oh, she was so pissed. But no worries. And also, kind of just going over, this was a big part of a lot of the news and issues yesterday. We haven't yet had the U.S. inflation chart out just yet. I think they stopped updating the CPI, but this reveals a lot of stress that we're having. I know that pipeline news was pretty bad, with a lot of the gasoline shortages and just lots of rising prices. All right, definitely need a drink right there, but this was a big issue, and we've talked about this, and I think we reached a 13-year high in the USA for inflation rates, and we are not done by any means. So, yeah, guys, I mean, things are not stopping. There's still news on both sides, and I don't think stock market's doing very, very good either at all. I think NASDAQ and Dow Jones didn't even perform well this week either. I know NASDAQ had a massive sell-off, just because, guys, I'm investing in stocks too. I'm not just a crypto guy. I just think, crypto deserves, and it will, it deserves more attention, and this is a bigger opportunity right now versus, equities and stocks and so on. But I'm definitely a huge thumbs up guy on diversification and moving that forward. So, alrighty, guys. So we're gonna kind of switch gears here. We are going to hop over we're gonna watch some videos, real quick. I got one on Twitter. Cool. Actually, we got some with Raul Paul. We're gonna go with that after. Also, and then I got some small points I wanted to do before we call it wrap up today. Today was definitely just a day of really good information and solid information. Just making sure I covered everything. Make sure I'm not forgetting anything because we did have a lot today. Cool. Okay, Motley Fool. That was this is actually here. We can definitely go over this one. 10 reasons I'll never buy Bitcoin. We'll save that for towards the end. We can do some rebuttals. Crypto Fear and Greed Index. Ooh, forgot to share this. This is the lowest we have been since March. I think we're actually lower than March. I think March had like 13 and we're at 11. So take this with what you see, or if you see opportunity, you see opportunity. If you see fear, you see fear. One or the other. You can just take a look at that, and that's a big one. That is pretty crazy. Absolutely. But alrighty, guys. So we're gonna hop on Squawk Box. We're gonna talk about Jim Cramer and see what he says. Jim Cramer is he owns Ethereum. He owns Bitcoin. He's definitely done a full 360, and I loved seeing him kind of defend us in this sense, and kind of his learning curve has been phenomenal, by the way. If you were here like when we were covering a lot of these guys have made like a 360 in terms of just because they've been educated. They've actually took the time to become educated, and they just don't hear mainstream media, and they just actually took the time to deep dive. A lot of these guys who are higher network don't do that. A lot of these guys don't have time to go out and learn new things. They have people who do that for them, and then they make their judgments and acquisitions based off their research, or not their research, but their people's research, and then they make their moves accordingly. So awesome. Let's give this a quick watch.
You're talking about this, but I'm looking at this. 34%. I'm looking at the.
Also, pay attention to how I really forget his name all the time. Just pay attention to the attitude of these guys. Sorry.
The significant significant fall in the cryptocurrency.
It was
Bitcoin
Elon
is
Musk.
now
Elon
down
Musk declared it
53%.
top.
Ether is down 40%. No, it's the Chinese.
Saturday Night Live.
It's the Chinese, Jim.
Well,
It's the Chinese.
Musk and
We
China.
said they've tightened the restrictions that ban financial institutions and payment companies from providing services related to cryptocurrency. We've got to tell people here. It's a fresh crackdown. They want to create their own, digital currency, we believe. By the way, it will only help their surveillance of everything that goes on in Chinese society, because they'll know exactly who's spending what at any moment, one would expect.
Well,
Not to mention they have this idea of perhaps trying to replace the dollar sometime with their own Chinese digital currency.
And they've had currency controls. Carl, I mean, look, I think we can relate, obviously, what's going on with Bitcoin with the sell-off in equities. But I think
Of course we can, right? I mean, that's why.
But
it's
there's
so
two
important.
kinds of equities.
But this is related.
No, but I had Greg Hayes on
so
last
many of
night.
these youngsters, Jim, are trading.
Well, they'll get
crypto.
burned out then. They'll take their stimmy.
Trading crypto and they're trading
Well, they're
stocks.
taking their
For them,
stimmy
it's the
and-
same thing.
Yes, but what does that have to do with the price-to-earnings ratio of Bristol Myers, which is held in very well? Why? Because it's a real company. Even though it missed the quarter, look at that, at 65. It's the Rock of Gibraltar. Raytheon, Greg Hayes, comes on Mad Money and tells us a bountiful story. You think that stock's going to get hurt? Do you think that Take-Two, after being the 496 best performer this year, it didn't report a great number and can bounce? Carl, I am trying to separate the Woodstock, Elon Musk, PRC control stocks from the rest of the market, because we're going to lose, and David remembers this, we're going to lose the essence of what happened in April of 2000, when there was a radical shift away from things that turned out to have very little worth and in favor of Coca-Cola. David, Carl, it may be the moment at hand. And if lumber rolls over every day, and I know it's still too high, and we blasted housing yesterday because of the housing numbers, what does Jay Powell have to do other than sit back and laugh?
Yeah, it's a great point, Jim. Lumber has gone from almost 1,700 to below 1,100. It was limit down again yesterday. Yeah, I see how you're trying to separate the market activity into various silos, but there is an ongoing discussion about high prices slowing down the recovery. Purchase apps on mortgages, Jim, up 2.5 year on year, as it's no longer just a supply issue, but a price issue as well.
Well, I think people want to wait. I think people have been scared a little bit and they want to wait. I know that when you buy a house and they have dummy appliances in it, waiting for real appliances, that's kind of a turn off. I do think that there's a general sense that things can come down if you're just a little bit patient, and that's okay. The consumer, David, is not brain dead. Consumers say, well, let's wait a little. Sure, the hurry may be over because the pandemic may be winding down.
Yes,
So a lot of the
it is.
behavior that we thought, like chasing a home,
Shepard Smith here. Thanks for watching.
So, yeah, I mean, we liked, Jim not only took, the narrative, because, that could have easily, if you think about it, because it could have easily spiraled out of control in terms of, letting Carl or David, chime in more on the cryptocurrency activity. And, I like, that's the one thing I noticed about Jim is that he will have such a good standpoint in the middle, regardless if he supports, the activity long term or short. And he's been, he is a cryptocurrency guy, now. That was not the case. But, if we went back in the time machine just 3-4 months ago, 6 months ago, that conversation could have easily been just a cryptocurrency, toilet bath. Seriously, he could have easily just went on and said, oh, it's over, wrap it up, sell, we're done. And, people, that's pretty reputable. Like Squawk Box, thousands of, every day, thousands and thousands and thousands of people watch Squawk Box. And, that could have easily been another bad catalyst and narrative in terms of, bad news. But I like how Jim handled it. He made the comparison to regular equities, and he, showed you, hey, this is not just in the crypto markets. You've seen NASDAQ down, you've seen Dow Jones down, you've seen all these other factors play into the role of, what has transpired into now. And, this is just the ripple effect of, what we got going on, realistically, it really is. And I like the way that he did that. So awesome. Our next video we're going to cover quickly is, This is from Mike Novogratz. He gave us a quote. Wow, this is really important. David Rubenstein is one of the most respected investors within the best DC ties ever. So I don't know a lot about David Rubenstein, but what I do know, from what Mike Novogratz says, that he's got really tight DC ties. But I'll have to go back and do my research. I think he's got some really, really good ties with. He's government official ties as well. A lot of these guys who got higher net worth, can wiggle their way into politics and be on the same level pretty much, if not better. So here, we're going to give this a watch. This one's pretty short. So, and also cryptocurrency has gone from nowhere to be forced on the market. It is here to stay. Cryptocurrency is not going anywhere. So that's what.
David, I know you're a long-term investor and not somebody who looks at many of these day-to-day moves, but yesterday was pretty weird, especially when you looked at cryptocurrency, a decline of 46% for Ethereum. I mean, you feel moves like that and you wonder how much froth has built up in the markets. You wonder how much momentum has been driving things, and what would you take away? Even as a long-term investor, you have to pay attention to some of these moves.
Well, remember, crypto has come from nowhere to be a force in the market. It's, in effect, a gold substitute for some. And I have invested in not cryptocurrencies myself, but in things that I would say facilitate the trading of it in various companies that are helping to trade or make it easier for people to be involved with cryptocurrency. And I did that in part because I think it's here to stay. Cryptocurrency is not going away, just like gold is not going away. So yes, it had its ups and downs, and yesterday was not a good day for it. But that's true of anything that is relatively new. And I don't think you're going to see anything like crypto going away and disappearing. It's here, and it's here because people in the market want something other than just the traditional currencies that we've had. And whether that's right or wrong, it's clearly something that the market wants. So yes, if you go into cryptocurrencies, you should expect big ups and downs and big fluctuations. And if you're not prepared for that, don't go into cryptocurrency. But the idea that cryptocurrency is going to go away, or that the government is going to be able to stop cryptocurrency from being something investors want, I think is unrealistic at this point.
Wow. There you go. I mean, it's simple, straightforward as it was. It's like, he's on here. We talk about that consistently. Pandora's box. I mean, if we're being real, just like you said, just like anything, you're going to have turbulence. You're going to have, very bearish trends or bearish times, and he really just capitalized it perfectly, just really short and simple to the point. You didn't have to do any crazy explanation. So that's a real big plus, guys. That's a really good one to see. And we're going to hop over to Raul Paul, and we're going to hop over to Bitcoin list, and we're kind of just going to go through, just some 4 experts give us reasons to smile despite crypto bloodbath, and this is some more hopium, and then I'll give you my personal thoughts as to the bearish scenario, like the worst case scenario that we could have. But realistically, I do think now that the worst was in, I'd like to say, but because if we were gonna see anything worse, I think we would have saw it carry over today, and that's just off metrics and news and understanding. So just my informational thought, but we're gonna go through and see what a lot of these bigger guys have to say. Love Kathy Wood. We're gonna watch that video actually too, because she does, I like her a lot in terms of what she has to say. I already watched that video, but we're gonna watch it before we log off today. Got a lot of videos today just because I know a lot of you guys are visual learners. Lex Movox, we were talking about, he was talking about 5.28 billion of stablecoins have been deposited in exchanges. This is an absolute all-time high, even bigger than pre-Tesla announcement move. Lots of people buying the dip. That is very true. We definitely like to see that. Here, let's open up this tweet and see, what this works. Crypto quant. So yes, it looks like we have hit a overall inflow of stablecoins. So that means people are loading up, either ready for a further dip, to buy it further, or they're just putting stablecoins on there for reserve, or most common, they're most likely buying assets, as that's what purchasing power is used for, the stablecoins. So that's a great thing to see. It's, you always like to see, and especially all-time highs. So that just shows that the information of what people are getting is good, and that is driving them to go investigate and do their due diligence. And Raul Paul, I love Raul Paul, like by far one of my top 3. He called the bottom of Ethereum and Bitcoin when we were last year in our March crash, so I always really do appreciate him. But he comes on here and he said this might be very useful for us to know, and we're also going to cover it here. We got a lot of Twitter tabs open today. But realistically, let's take a look. These might be useful for you. BTC now versus 2013. I'm going to save this, and I'm going to put this in the Patreon for all my Patreon members. But let's take a look. Majority of people were not here For 2013, I was in like 7th grade or 8th grade around that time. I did not know what any of this was. But, if we just kind of just follow the metrics, look at the chart, I mean, that's pretty identical. That looks pretty identical. We here, intersecting there, oh my goodness, just like, we talk about history rhyming, my gosh, like, my goodness, Here, let's even go back. I think we covered this one as well. Yeah, this is crazy. It's not like anything new, guys. I mean, we've talked about this. We put up the logarithmic the bands and the chart outflows and Glassnode and Ethereum smart contract locked up funds. And I mean, we've covered exactly just like this. And I mean, seriously, guys. I mean, wow. The picture just really just tells itself. So. Let's see, Shinzu, we have heard talks about the super cycle, and all the super cycle really means is that, we got such massive amounts of institutional money. So, really big players here. And, with a lot of big players, you have, billions of dollars, millions of dollars. And, a lot of these big players don't like losing millions and millions and millions of dollars. So, with the continued adoption and moving forward, our drops will become less significant and our bear markets will become shorter. I do agree somewhat halfway with these terms, and that is pretty true, just because we've talked about, like I said, the lengthening cycle theory, and we've talked about how this could change the game in terms of metrics. I mean, the game has already changed in terms of next cycle of how we're going to look back at this data because of the correction we just had. It was of course rhyming with the 2013, but we have never seen a correction that deep in the bull cycle before. So that is one of the honestly main reasons that people kind of had their heads turning to the left and back around. A lot of the higher experts and people who had been here a while, that's why some of those guys were keeping pretty solid yesterday, and they were giving their viewpoints and their neutral points, or their bullish or bearish cases. But like I said, anyone who told you they weren't scared yesterday or still isn't a little shaken up, it for sure is, because I was 100%. So definitely, guys. I'm just gonna double check and make sure we really got through everything that I wanted to. Here, we're gonna go up and watch that Kathy Wood video. Before we do that, I just want to make sure that we're all good before we get, because that will be our wrap up for the day, guys, as well. So don't need to look at that, just double checking. Yeah, guys, I think we are all good. Awesome. I will put those PNGs in the Patreon after our last video, and then you guys can have those just for pocket material.
Bitcoin, I mean, you at one point, I think back in April, told Dow
Sorry,
Jones
this
that it could
quality
go to
is,
about
hold on. Sorry, guys, let's see if we can get better quality. Oh my goodness. Let's see. Let's go to tweets for Pomp. Let's see. He does tweet a lot. Oh, here, he got on that. That's awesome. Let's see. There we go. Perfect.
Point, I think back in April,
Still same quality.
said it could
Sorry.
go to about $500,000. Do you still hold that target? Do you still think that's where we're headed?
We do. I do. Yassine El Mandra is our crypto analyst, and we go through soul-searching times like this and scrape the models, and yes, our conviction is as high. The one thing that has changed here, however, is the environmental concerns around Bitcoin in particular have caused people like Elon Musk to pull away and say, whoa, 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 let me make sure I understand this. And we believe that even this is going to change, because first of all, right now, the percentage of Bitcoin mined with renewables and hydroelectric power is quite substantial. I think in China, it's over 50% in renewables. And we also believe, and we wrote a paper in conjunction with Square on this, and we're going to have a conference about it in July. We believe that Bitcoin mining integrated into the distributed grid, and by that I mean solar roofs, power walls in homes, utilities, merchant power producers, starting to include Bitcoin mining in the ecosystem. Why would they do that? They would do it because renewables are intermittent power sources, right? Weather, is it sunny or not? Wind, is it windy or not? And Bitcoin mining could take off if there's excess energy from solar being loaded into power walls. It can be offloaded into Bitcoin mining, and the whole ecosystem therefore becomes much more economic. if this happens, we believe that the adoption of solar is going to accelerate dramatically because there's another profit center associated with it, Bitcoin mining.
Well, what happens though in the meantime? So here we are at 35,000, Kathy. Do you think we go much lower from here?
You never know how low is low when a market gets very emotional. A lot of traders see Bitcoin dropping below the 200-day moving average, which was at 40,000. So traders, once that happened, they just dump. Some just dump and run. I think we're in a capitulation phase. Yassine has a dashboard. We were looking at all the indicators this morning. They are all suggesting that we are in the capitulation phase, which is a really great time to buy, no matter what the asset is. A capitulation phase is buy. It's on sale. Now, am I saying 35,000 is the low? You know, if traders, and there are a lot of speculators in Bitcoin, if they are running for the hills just because Bitcoin has broken through a moving average that is important to them, it could continue, but all of our indicators are saying this is capitulation right now.
Do you have a low point on your model for Bitcoin?
No, these metrics are more a measure. Are we in a truly capitulation phase? Okay. And it's very detailed. Yassine uses on-chain analysis, which this is the only asset where you can see exactly who's doing what, when, why, and how. And all of those metrics are saying this is a capitulation. This is as bad as it got during the coronavirus crisis.
Alrighty, guys. I mean, whew, I really enjoy her. I like Kathy Wood. I like her opinion. I of course like Ark. You know, her the hedge fund she runs and the investments firm she runs. But alrighty, guys. That is it for the day. I'm gonna wrap up here. Definitely, I didn't realize we're already clocking at 41 minutes, so a bit of a longer stream day just because we had more visual learners, visual videos today. So like and subscribe, bro. Like and subscribe. Share this with friends and family. If you're looking to join the Patreon, link is below. Cheapest subscription is like $3, literally less than a cup of coffee. So if anyone finds that useful, in friends or family, definitely send that to them. But thanks so much, guys. I will see you guys on Tuesday. I'm going to be paying close attention. I'll bring updates throughout the weekend and before that. So if anything gets crazy or, things get, wild news, etc., I'll be here to keep you guys updated. So, alrighty, guys. Thanks so much. Stay safe.